Our next speaker is Mr. Aaron Stead. Aaron has an extensive background here in the Valley. I feel like personally Aaron is probably one of the best kept secrets in terms of executives here in Arizona in helping software businesses accelerate growth. Oh, come on up, Aaron. Hi. Do you ever feel kind of weird when someone starts talking about you and you're in the room and you're like, what's going on?
Not as weird as I felt today. Thank you all for making me feel underdressed. We have about 2,200 employees globally, and on any given day, 2,180 of them are wearing yoga pants and athletic gear. So it's actually great to show up. I forget people wear sport coats anymore.
Yeah. I'm guilty as charged. Well, let me give your background a little bit because I think it's really helpful for everybody to hear it. You're currently the SVP and General Manager of North America for MINDBODY, where you lead the North American revenue and business development teams. Prior to joining MINDBODY, you served as Chief Revenue Officer at Booker, where you successfully sold the business to MINDBODY for $150 million. Amazing. Before Booker, you served as Chief Sales and Marketing Officer at Infusionsoft, now referred to as Keep, here in Chandler, where you ushered the company to more than 10 times growth in both revenue and size, from 50 employees to more than 650, and from 10 million in revenue to 110 million in revenue. Remarkable. You have an MBA from Ken Blanchard School of Business at Grand Canyon University and a BA from ASU. And when you're not busy at work or being a family man, you can find them on the golf course.
That's right.
That about sum it up?
That's right.
So
Thank you.
walk me through how a guy from Iowa ends up here in sunny Scottsdale leading these remarkable sales efforts in these companies.
So two very impactful things for any 18-year-old boy. I had the chance to come visit during my winter break, my senior year of high school, and I played golf on Christmas Eve for the first time. So that was number one. And then the next day, I got a personal tour of ASU from the reigning Miss Arizona. And I thought to myself, it's probably a place I should be. And so that was it. I made my decision on the spot, and I moved out, drove my car out here in the July of 1998, and I've never quite made it back.
That's awesome. That's awesome. Do you get back?
My sister's still back there. My parents wised up and are down here now too. So get to see them often, and they've got 4 grandkids back in Iowa, so they do kind of half and half.
That's awesome. Mr. Parsons did a brief stint in Iowa, and
Yeah.
it seems more and more we've got that Midwest love coming out here, assimilating and enjoying what we've got brewing. So want to talk the mixture of attendees here today. We have people from small business to middle market, various service providers sprinkled about. You've had tremendous success personally from your time at different companies. Can you share any lessons or insights about aligning a software solution to niche markets?
Yeah, so I've had a chance to be both on a horizontal software side and now on a vertical specific software side. I tell you, the vertical play is much easier for anybody that's out there in the software space. Your ability to make software for, we in the wellness space, we even struggle with all the different subverticals: yoga studio needs versus high intensity fitness needs versus spa needs versus chiropractic needs. And so, one thing that's true throughout is really understanding your customer. Spending time in 2 venture-backed businesses, it was all about growth and hypergrowth. And what happens is you lose the actual focus on the customer. What customers are being successful, who's staying and paying you more, what customers are profitable for you, and what customers do you lose your ass on. So when I think about what metrics to focus on to really excel growth, it's everything around knowing your customer, from customer acquisition. What are your different customer acquisition channels? What's it cost to acquire a customer in the different channels? Tracking that through to average price that a customer would pay by channel, how long they stay with you, do they consume additional products and services. So really just getting, when you think about a bullseye, I spend a little bit of time with startup companies and from an advisory capacity. The number one mistake I see small businesses make as they're up and coming is they try to be too many things for too many people. So when you think about a bullseye, really understand your bullseye target and who is a great fit. Now, when you start, there may only be 150 of them in the country. That's okay. Go try and sell all 150 of them. Don't get lost in the total addressable market of 2 billion or 150 million, whatever it might be. Start at your bullseye, get really good, understand that customer, and kind of work each ring out. And that's really one of the big mistakes I know we've made over the years in growing businesses. And I see a lot of small businesses making, and we at Booker we raised over $100 million. At Infusionsoft we raised almost $200 million. So when capital constraint is not an issue, you have to be super careful on how you put that capital to work and make sure that it's targeted in ways that will create growth in the short term, but also sustain growth. Because at some point, it'll eventually catch up to you.
And those are big numbers that you mentioned raising. When you raise that amount of money, you have those investors who are scrutinizing how you are spending that money and factoring on the growth. How do you balance those experiments of identifying those customers and their needs with what those investors want?
Yeah, I think you as a business, you have to be adaptable to what the times are calling. For any bankers or VCs in here, the world tells you to behave differently in different economic periods of time. At time, it's all about driving profitability, and your valuation is dependent upon your ability to have profitable growth. At other times, when things are going really well, it's growth at all costs, and it's about how fast can you deploy the capital to create top-line growth. So number one, it's about being adaptable, and number two, really understanding the levers that you can pull if and when the world tells you to change. And if you can't, which I've been part of companies where we've struggled to do that as the world changed, it sets you back and puts you behind. But generally speaking, it's your classic. If you're going to spend here, what are we going to get in return, both in the short term and then every investor has their dynamics, which are largely driven by their funds and their LPs. If the fund has a short turnaround time of sub 5 years, that investor's not going to care a lot about your long-term growth plans. They want to know what's going to happen in the next 18 months to 2 years, so they can get out and turn around their fund. So I think it starts with just understanding the investor.
So switching gears now to MindBody, software as a service company, both B2B and making that switch to B2C now as you've built out this marketplace. What's changed, and what are those bigger challenges now?
So the challenge, so the MindBody business, we are a SaaS business management platform for the wellness space. And over the last 2 years, we've really been expanding out beyond our B2B business to build our business to consumer. Any MindBody app users in here? Got a few. MindBody app on your phone, regardless of where you are in the world, and you want to take a yoga class, high intensity fitness class, want to go get a massage, pull up your MindBody app, and we've got the inventory available for you to book and or pay right there. So how I've seen our business evolve in the time that I've spent, the B2C, the customer app was really in service to our B2B customers. It was like a lead generation business for our business to business customers. Now we actually see the inverse. We see our B2B business as being the core inventory and the accelerator of our business to consumer platform. And so that just kind of transfer of thinking is really where we're headed now from here over the next 3 to 5 years.
So on the growth side, you probably represent one of the larger companies here in the room today. There are different ways to grow. And from MindBody, previously you were with Booker, and so that was an acquisition. Talk to us about that shortcut of being acquired, selling the company. what that looks like for the culture, for the change, and then what eventually transpires as you get new resources and leadership in.
Yeah, it was a fascinating experience for me. So I joined Booker. I was only with Booker about 18 months prior to our acquisition, but Booker and MindBody were fierce competitors. So Booker was really the stronghold in the appointment-based spa salon business, and MindBody was the stronghold in class-based fitness and integrative health. And so integrating those two cultures, which folks had spent upwards of 7 years directly competing with one another, was a pretty interesting challenge. I didn't harbor a lot of those feelings being a newer person into the business, but I was responsible for the integration. And you had 3 distinct camps. You had people who just woke up every day and were going to make it their daily mission to not have this integration be successful. You had folks who
So actively wanting to sabotage.
Run the Booker folks out of the company. Would actively say, MindBody's a better platform. I can't believe we bought this other platform. Why are there Booker folks on our executive team? So you've got that camp. You've got those those who are they harbor their kind of hometown team feelings, but we're open to evolution. And then you have a smaller camp or a smaller subset of people who really saw the bigger potential and outcome of combining the two companies and the growth that would result as a part of bringing them together.
What was that initial communication of, okay, this deal's done, and how does that get disseminated across the organizations?
So 2 things. We signed the term sheet, and because at the time MindBody was a public company, we announced it the same day. And then the integration or the actual deal closed, and the integration started about 40 days later. Scottsdale was actually it was the front lines for the people integration. We were in the same buildings in Skysong, and I decided that we weren't going to ease into this thing. We were just going to combine floors right away. So we threw our folks into the pond, and let's see if we could swim or not. And so it was fun. Scottsdale at the time, between the 2 teams here, we were about 100 people.
Okay.
We're now close to 300 here in Scottsdale, and plans to continue to grow. So it was an exciting kind of entry point to the integration, and it's been a great scale office for us and growth office for us.
So private company acquired by a public company, and then now, as of earlier this year, acquired and taken private again by Vista Equity Partners.
Yep.
Private equity. So that was almost a $2 billion transaction.
It was
quite large. So now, how has that changed the metrics and the decision making and the culture that you are even larger?
So what's been great about Vista in general, so Vista, for those of you not familiar, they've acquired over 300 software companies in the last 20 years. When they have been majority owner or stakeholder post that transaction, they've never lost money on a deal. And by the way, I've checked that fact; it's actually true. So they've seen it, they've done it, they've got a playbook for it. So that's been really neat for us to see. Okay, these things we're struggling with, they've seen it before. Here's 3 different ways to potentially solve for it. And then the other neat thing that Vista brought to the table was a little bit of stepping out of the hamster wheel. So I had spent at that time, call it 14 years in high growth, high pressure, VC backed. What are you doing this quarter? What are you doing next quarter? And as we all know, as a public company, especially a revenue owner, you earn your job 90 days at a time. So a breath of fresh air from Vista. Vista came in and said, "Look, we don't care how you're going to do tomorrow, next quarter, the quarter after. Our goal is we're trying to build a better business in 2022 and 2023." So
really able to kind of exhale and look at the long-term strategy of where you guys can go. Because of the amount of money that they're going to put in and the resources and the patience.
Yep.
Okay.
Yeah, and it was go do the things you set aside because you didn't feel like you had the time, the capital, the resources, and you couldn't take down growth a couple percentage points in order to do it.
That's a massive transformation. The last Smart Funding Summit we had was on the topic of attracting private equity, and that was one of the key themes that came out was what a challenge it is to actually make those investments because of the time that's necessary to sometimes go on those daunting death marches on the technology side, or making sure that you have the right people in place. So it sounds like you're at that place now. How has that changed the culture across the different offices here and then in San Luis Obispo, California?
Yeah, it's at first it was I would say it was for those of you in private equity in the audience, I apologize, but PE doesn't have the best brand, especially in the software world and amongst employees. And to make matters worse, Vista had acquired another company in San Luis Obispo. SLO's about a town of 40,000 people, so word spreads fast. And they had kind of dismantled it, took it apart, and moved jobs out of town. So we initially had a large fear to overcome within our SLO office, and so culturally that shifted. We're as part of our growth challenges, because there's only 40,000 people in SLO, and our growth needs as a business, we really see Scottsdale as one of our key growth areas in Atlanta as well. And so just the culture shift of the main, kind of the mothership being in SLO and having these kind of tiny satellite offices, they're now more evolving to kind of equal distribution, especially in my camps where we have as many go-to-market folks in Scottsdale and Atlanta as we do in SLO now. So that's been a fun cultural evolution to build kind of what I would call three distinct headquarters for our go-to-market machine.
Has there been cross-pollination between some of the other leaders or folks at those other offices to be able to come out here or go there?
Yeah, it's one of the great things of operating a global company. We've had folks pick up and move to our London office, our Sydney office. A lot of folks are getting out of California and coming to Arizona
because the state's rotting. Sorry.
So we've had quite a few folks from our San Luis Obispo office move here, and quite a few folks from the Booker office, which was headquartered in New York City, move out here as well.
Terrific. And so you said global. How has that presented a challenge working here and raising a family in Arizona?
So thankfully, I've got North American responsibility. We've got 12 North America offices, so I'm gone a lot, but I don't have to spend a lot of time in our global offices. But it's just time zone things. In order to pull in the general managers from Asia Pacific and our EMEA teams, you just kind of rotate days throughout the week. We have our global forecasting call that rotates between early morning for our EMEA folks and early evening for our Asia Pacific folks, and you do your best to try to work around those and really just be respectful of the different time zones. I think probably the thing I've learned the most is empathy and respect for other offices. For our New York folks and our Atlanta folks, not scheduling conference calls at 5 p.m. on a Friday, which is 8 p.m. on a Friday night for them. It sounds obvious, and I see a lot of heads nodding. It's really not that obvious when you spend so much time in your own office and in your own time zones. Just really being empathetic and having consideration for people in other offices.
Awesome. We got some time for some questions. Anybody have any questions for Aaron?
Sure. As you look back at the integration of the two teams and the let's say the humans involved in that, do you think did you act quickly if there was trouble, or did you say, oh, it's going to get better, and you kept believing, and then it ended the way you thought it was, and you wish you would have pulled the trigger on a few people sooner that became cancerous, or how did you navigate, like, I don't know, you know what I mean, like how those interactions worked?
Yeah, it's a great question. So for me, there's over the years, there's one thing I look for, and that's resistance. When I sense resistance, a resistance to listen, a resistance to be open to a new idea, that's when I tell our team to move relatively quickly. And in that scenario, it depends on the role. You know, if I have someone in a director of sales role or VP of marketing role, and that type of attitude is happening, you've got to get them out immediately. If it's a frontline salesperson, you give them a little bit more time to work through it. But resistance is just a key thing to look for as you're trying to transform your companies. I will invest in people probably to a fault too long as they show up, they're willing to listen, they're willing to learn, they're willing to engage. It's when you sense that resistance, I think you've got to pull the plug pretty quick.
And kind of piggyback on that, I mean, you mentioned the sport coat when you walked up here. You guys have various generations of talent working within your organization. How has that presented an opportunity or a challenge within the company?
About 80% of our workforce is millennial, and millennial with a extra millennialness to them. Because they are so health and wellness driven and connected to the wellness revolution, it causes a different next level set of attitudes at times. You know, the thing that I've learned over the last, call it 5-7 years of working closely with millennials is really just starting everything back to the simplest why. If there's a connected purpose, and thankfully in our space, you know, our mission as a company is to connect the people of the world to wellness. And so we every day we have a really purposeful mission that we can get rallied around. But whether it's a meeting, whether it's a sales initiative, whether it's an attitude behavior adjustment, it really just, you got to get it back to the core why. Why is this going to benefit them? Why is this going to benefit the world? Why is this going to benefit the culture in the office that they spend time in every day?
Awesome. Any other questions? Right here.
So you've given us some really great insight into user adoption in times of transformation. But can you speak on, like, take one step back and speak on the pain points that you actually expect to be alleviated through, technological transformation stemming from the investment?
Yeah, so number one, we expect to become much more efficient as a business. I call them the human hammock. We have roles in our company that are solely in place due to broken processes, broken adoption of technology. This is my estimation. I feel like we've probably got 300 to 400 folks globally that we wouldn't necessarily lay off, but you just move them up the value stack. If they're doing a bunch of manual things that you can automate via technology, or B, you can outsource, then it doesn't necessarily mean you go backwards in headcount, but you take that talent and those people and that passion and you move it up the value stack. So number one, I would say is definitely we become more efficient and profitable as a business. And then number two, the customer experience improves. Today we deal with all sorts of issues because one system isn't talking to another, or customer billing errors, or someone calls into our technical support team, and then later that afternoon, someone from our customer success team calls out to that same customer, and we don't look like, it looks like our left hand doesn't know what the right hand's doing because our systems aren't integrated, and we didn't know that someone had called into technical support that morning, and when our customer success person reached out that afternoon. So I think number two, the customer experience drastically improves. And my hope is growth and revenue growth actually ticks up as well, because our revenue focused and revenue generated people can spend more time doing what they do best, which is drive revenue versus spending time in systems. I've done some just kind of time analysis, and our salespeople, for them to process a deal, if I can cut 40% of that process out for them, gets them back on the phone faster, talking to our prospects and target market faster.
I think that's really important. Those big sales teams, they're working in enterprise software. Those have to be fun rooms to interface in, right? I mean, if you're in that software all day, it has to be elegantly designed. But you're looking inwardly at that. I think the second part of that question would be, how do your existing customers not suffer because the product is being innovated and continues to get better?
it's a real challenge for us. For anybody who's been in the technology space, software space, you don't build technology today the way you built it 15, 17 years ago. So we've got massive re-architecture challenges, scale challenges, and the goal is to try and get through that product work without disrupting the day-to-day experience for our customers. One of the things we pride ourselves on is we truly are the infrastructure of our small business clients. If you're a yoga studio, you're doing your online booking, your staff management, your payment processing, your payroll, everything as part of kind of the core system at MindBody. And so our job is to get from where we are today to a new aged experience, UI experience, without disrupting their business. And that our CTO, I know that's the one thing that keeps them up at night.
Sure. Aaron, thank you so much for the time.
Yeah, you're welcome. Thanks for having
We
me.
wish you all the success.
Thanks.
MindBody's going to continue to grow here in Scottsdale, and we'll be checking in on your story shortly.